How payments actually work, explained simply. Most people think payments are simple. You tap your phone, the money moves, the transaction is done. But what actually happens in those few seconds is very different. Because money doesn't really move the way we imagine it does. It doesn't travel from one account to another like an object. Instead, payments are mostly about messages and promises. And once you see that, a lot of things suddenly make sense. This becomes important later. When you pay for something, there are always at least 4 parties involved. Even if it feels like just you in the store. There's you, there's the merchant, there's your bank, and there's the merchant's bank. Sometimes there are more layers in between, but these 4 are always there in some form. When you tap your card or phone, the first thing that happens is not money moving. What happens first is a question being asked. Your card sends a message that basically says, does this person have enough balance or credit to pay for this? That message doesn't go straight to your bank. It travels through a payment network first. This network acts like a translator and traffic controller. It makes sure everyone understands the message and that it reaches the right bank. Your bank then checks a few things. Is the card valid? Is it blocked? Is there enough money or credit? If everything looks fine, your bank sends back a response. Yes, this payment is allowed. Only then does the terminal beep. Only then does the screen say approved. But notice something important here. At this point, no money has moved yet. This part is called authorization. It's just permission. Think of it like reserving a hotel room. The room is held for you, but you haven't actually stayed there yet. The money is reserved, not transferred. This is why sometimes you see a payment pending, or temporarily deducted, but not finalized. The actual movement happens later. Usually at the end of the day, the merchant sends a batch of all approved payments. This is called clearing. Now the banks compare notes. They say, okay, these payments really happened. Only after that comes settlement. This is when money actually moves between banks. And even then, it's not your individual payment traveling on its own. Banks don't send millions of tiny transactions back and forth. They bundle everything together. They calculate the difference and only send the final amounts. So if one bank owes another bank 10 million today, they just send 10 million. Not every coffee payment separately. This is one reason payments feel instant, but money movement is slow. Now here's where it gets interesting. When you use a debit card, the money is yours. The bank just checks if you have it. When you use a credit card, the money isn't yours at all. The bank pays the merchant for you, and you promise to pay the bank later. So a credit card payment is actually a small loan. Every single time. This is why credit cards feel so smooth. The bank takes the risk, not the store. And this is also why credit card payments are more expensive for merchants. Every payment has fees, but credit card fees are higher. Part of that fee pays for fraud protection, part pays for the convenience, and part pays for the risk the bank is taking. This is why some small businesses prefer cash. Not because cash is old-fashioned, but because digital payments are never free. Now let's talk about refunds. When a refund happens, the money doesn't reverse the original path. It creates a new transaction in the opposite direction. That's why refunds can take days. They have to go through the same system. Authorization, clearing, settlement. And here's a common misconception. People think banks send money to each other all day long. They don't. Most of the time, they just update ledgers. Numbers go up on one side, down on another. Real money movement between banks happens in large chunks, at specific times, often once per day. This is also why weekends matter. And holidays. The payment networks may be online, but bank settlement systems often are not. So when something feels slow, it's usually not technology. It's timing. Now let's zoom out for a moment. At its core, a payment system is about trust. The merchant trusts the bank. The bank trusts the network. The network trusts the other bank. And everyone trusts that the rules are followed. When that trust breaks down, systems get complicated. More checks, more delays, more fees. This is why newer payment methods focus so much on verification. Biometrics, tokens, device authentication. Not to make payments flashy, but to protect trust. Because without trust, instant payments wouldn't exist at all. And here's the quiet insight most people miss. Payments feel simple not because they are simple, but because complexity is hidden from you. That beep at the checkout is the result of decades of infrastructure, rules, agreements, and risk management. You're not watching money move. You're watching a system agree that it will move later. Once you understand that, a lot of confusion disappears. Why pending transactions exist. Why refunds take time. why credit feels different from debit, why banks care so much about fraud. It's all the same system, just seen from different angles. And that's really what payments are. Not money flying around, but promises being recorded and settled. That's it. Did you already know this is how it works, or did something surprise you? And if there's something else you've always wondered how it works, leave it in the comments. Thanks for listening. Till next time.